Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Triple Q report for Monday, January 3rd, 2022. Happy New Year. Before I jump into the charts, just want to encourage you to please click like each and every time you watch the daily Triple Q report. It does actually help out a great deal with regard to our ability to show up early on in any search results on YouTube for Triple Q analysis. And subscribing to the daily Triple Q report will provide you notification each and every time new content has been uploaded to the Wicked Stocks YouTube channel. That includes the daily SPY report, the daily Triple Q report, the weekly DIA, the Dow Jones, the weekly IWM, the Russell 2000. We also put out a free stock pick a week, and in the next week or two, probably two, we're going to have a weekly Bitcoin report. So there's a lot going on, and subscribing will provide you that information early on when it's most relevant. Anyway, let's take a look at the chart. So I need to backtrack a little bit and show you, that this formation at 398.12, while yes, we did close below it, my gut tells me, not just my gut, I do use 1% violation margins for long-term support and resistance. This is not long-term, and so I don't really use that rule when it comes to just sort of near to mid-term dynamics. So we did, yes, close below the 398.12 formation. It was 398.25 on Friday. We settled 397.85, but it was just by too narrow a margin for me to feel comfortable recommending being an aggressive short seller here coming into the week. It wouldn't take much. All we have to do is open, 30 cents higher, and we're actually above 398.12. So just a word of caution. And I also want to emphasize that the daily SPY, itself, did not close below its respective formation. It came close, it tested it, but it settled just above it. So we have a bit of a mixed bag here, and I just don't think we have a clear-cut case for bearish continuation, not only for the week, but into later January. That would come with, I think, just a mere lower settlement. Should do it. Certainly below, the low from last Friday of 397.34, that should do it. But that's a whole nother, concept that I'm not going to get into right now. If we do close below 398.12, and as I said, if we close below Friday's 397.34, I think that is enough of a lower settlement, then yes, over the next, possibly this week, 3 to 5 days, perhaps 387.83, that downside Fibonacci retracement, A, B, as you can see here, and then ultimately that failure to follow through on the buy signal above 398.12 is in itself a valid sign of weakness as we continue into mid-January or so. The next couple, 2-3 weeks could actually see 375.46. Now, I must say 375.46 is not a clear-cut target, but it is quote-unquote attainable. In other words, the failure to follow through on the buy signal, the fact that we're up in the all-time high territory and there appears to be a failure to follow through, that in itself a lens for bearish continuation. We've got some longs trapped in the market, perhaps that would fuel, a sell-off. And so 387.83 is not a magic support area. I consider it 2 stars. In other words, we could get a nice 2 to 3 day bounce off of there, maybe for a week, who knows. But I just think you may position yourself for the mid to lower 370s if we were to close clearly today below 398.12. And then on the upside, the inverse is true. If we were to close above 405.07, then we have a clear 2 to 3 week buy signal. That's actually more clear. The buy signal above 405.07 is more clear-cut. I would anticipate the low to mid 420s within 2 to 3 weeks. While closing below 398.12, I'm just going to merely say 375.46 in reach. It is an idea that is worth fleshing out, worth watching, worth considering playing. In other words, were we to close today below 398.12 clearly, And by clearly, I mean, I think just closing below last Friday's 397.34 low would be enough. Now, then I think you can position yourself, whether that means for you, being short the ETF or buying, puts, out of the money puts, at the money puts, whatever the case might be. And I'll let you decide that, of course. So let's jump into the support and resistance. You can see here we've got 398.12 that's already been illustrated, and 405.07. That is that band of channel support and resistance. We could trade inside that 398.12 to 405.07 area through the week. Now, for the day itself, if we happen to push, especially if we open today above 398.12, and I've already mentioned that won't take a lot of effort on the market's part to just sort of, open up 30 cents or higher, and we are back above 398.12, 401.79 in reach today. That is a respectable intraday resistance area. Can contain initial, possibly daily buying pressures. And if we push through 401.79, then 405.07 is attainable intraday, where we can top out into later week. Both 398.12 and 405.07 able to contain activity into midweek, especially if we open above 398.12. And I've already mentioned that if we open below it, well, let's talk about that. If we open below 398.12, 394.22 in reach today, where we could bottom out initially, quite possibly for the day. And if we close below 398.12, I've mentioned how 387.83 becomes a 3 to 5 day target. And then over the next couple of weeks, 2 to 3 weeks at the most, we can continue all the way back in the 370s, where we find very respectable support, able to contain January selling pressures. And from there, we can turn back up into the very low 400 area once again within a matter of weeks. Let's talk upside, that if we do once again close above 405.07, I don't see that happening today, but you never know. It is in reach today if we open above 398.12, and I've already mentioned how 401.79 could snag initial, possibly daily buying pressures. But if we push through 401.79, 405.07 in reach, and if we close above 405.07, that is a pretty clear-cut buy signal into later January. The low 420s, soon to be the mid 420s, 422.78 up to 424.74. You really have kind of an intersection of a long-term channel top with a more mid-term channel top. That area, if tested by the end of January, able to contain buying through February, possibly into later Q1, and inversely, a significant sign of follow-through buying into Q2 if we were to close above that 424.74 area. Anyway, that's about all I've got to say. I'll show you, leave the support resistance levels here for your printing, whether it's in your smartphone or your desktop. And please click like each and every time you watch the Daily Triple Q Report. I do appreciate it. And click subscribe. That is actually an advantage for you in your ability to be notified of new content each and every time Wicked Stocks uploads to its YouTube channel. And that's all I've got. I will be back tomorrow for Tuesday's Daily Triple Q Report. That's all I've got. You have a great day, and we'll talk soon.